For today, though, it looks like investors are very encouraged by the developments. We have all three of the major averages in the green. We saw major stocks adding to those gains after this deal was announced. We have the Dow up 343 points right now. Let's talk about all this with Brian Belski. He's BMO Capital Markets Chief Investment Strategist. And Brian, it's great to see you again. It looks like investors, they're cheering the news of this deal today. I guess, is this going to be what's needed here to keep this momentum moving to the upside in the market?
Well, Shauna, great to see you as well. I think it's a bit of good news. We're in a bit of a news vacuum, obviously, in between Fed meetings and in between earnings and things. And as the market, what we believe is happening as the market transitions from this kind of more momentum driven market with PE expansions and really technical factors leading the market for the majority of the last several months, I think we're going to transition to more of an earnings-driven market, more of a fundamental bottoms-up market. And so news events like this with respect to the potential for increasing and developing internal demand for new infrastructure and industries across the board, whether or not it's technology, industrials, communication services, and financials, remember, as well. I think the diversified nature of your portfolio is going to be the most important thing. So we continue to advocate to be equal weight growth and value and to be equal weight across the board, small, mid, and large cap stocks, because we think a rising tide is going to carry all ships.
Oh, Brian, I was going through your latest note, and you were talking about high-quality stocks versus low quality. Low quality has been outperforming since the March lows, I believe you wrote. Could you break that down? How do you define these stocks, low quality and high quality, and then where do you allocate money, see opportunities?
Great question, Jared. Thanks for asking it. Everybody likes to throw out quality, but we put several measures in quality. We have happen to use S&P quality ranking, so anything above a B plus or higher quality ranking. Start there. Then we also dovetail things like earnings discernibility, as we define as low standard deviation of earnings, so you don't have a lot of variability of earnings, improving cash flow, improving return on equity and return on assets. When we see those types of things, we think it's a high quality asset. And so if you take a look, Jared, with respect to the performance of the market, that's why areas like energy, since the March lows, have done so well, because the majority of the energy sector are low quality. They've been losing money. Their cash flow hasn't been great. Return on equity hasn't been great either, and a lot of debt. And so the majority of the value move, we believe, has been these lower quality assets. So let's go forward and see what are high quality assets from here. There are some healthcare stocks that look very good in terms of high quality, but from a sector perspective, we still think it's financials and technology if you're only using high quality. And I think it really speaks to the discernibility and consistency, quite frankly, of earnings in the technology sector that we're going to continue to kind of lead the way, we think, over the next 3 to 5 years.
Brian, since the last time we talked, we had the FOMC meeting, the Fed taking a slightly more hawkish view. It certainly did spook investors just a little bit. What did you think of that reaction, and what do you think this means for equities as we look out over the short term, at least?
Well, Shauna, I don't think the Fed meeting very much spooked people. I think it's post-Fed meeting and some of the comments by non-voting members that kind of spooked the markets, and what I like to call kind of a conniption. Everyone's waiting for the big taper tantrum, but that was more of a market conniption than anything. Listen, the majority of investors that I speak with can't wait for the market to go down, because a lot of them have been underperforming and they want to reallocate capital, quite frankly. And so this whole notion of tapering, we think, is way overblown. And we actually think that there's a very good chance that the market could go up if we start to taper, because that would also show you additional signs that the economy is improving. So remember, this whole tapering thing, it's a second derivative, buying less than not buying anything, and then eventually raising rates. And this is a whole process that's going to take a long time. So we're trying to thread the needle here perfectly, and the market can never do that. So just ride the wave and continue to follow what Jay Powell says. He has been very clear that inflation is transitory, and we're going to believe him.
Oh, yeah, I couldn't echo it that more. I want to get your take on earnings season. Kicks off in about 3 weeks. We were talking about the banks, the value trade. What's on your radar? How are we going to kick things off here?
What's on my radar is we still have double-digit earnings growth. So this whole notion of we're going back to growth because growth is scarce. Growth isn't scarce. We have double-digit earnings growth on near zero interest rates. So that's why I think you really need to be diversified across the board in equal weight growth and value. Just buy really good companies. I know it sounds kind of elementary, but I think a lot of people don't know how to stock pick anymore, Jared. So I still think the banks, the money center banks, the asset managers, and the brokers exude this theme of scale and financials that a lot of investors don't understand. I think you need scale to continue to compete, especially in financials. So that's why we are overweight financials, and particularly overweight those three industry groups within financials.
Brian, always great to speak with you. Brian Belski, BMO Capital Markets Chief Investment Strategist. We will talk to you again soon.